Tim Quast joins the show now. He is the founder of Modern IR and Market Structure Edge. Joins us every Monday, except when there's holidays. Tim, how are we doing? Long time no talk.
Yeah, good to see you guys. I'm going through withdrawals, but not from market structure.
Okay.
My trainer, the great Charlie C, decided to go on hiatus for June and July. And I should tell you, so Charlie he's got a degree in applied mathematics, and he was the founder of a quantitative hedge fund that he and his partners sold. And the algorithms behind it have become the algorithms that robo-advisors use. And so, so what other trainer would I choose but a quant math guy? Right? So he just trains for fun. And that's what you want to do with Edge. Use Edge so you can do whatever you want for fun. That's the idea. But I heard your discussion about Biogen, at least a part of it.
Yep.
And Dennis, I thought
what's the market structure look like going into this event, and how do you approach? When you're going to get a major event like this, it's going to move price way up or way down.
Right.
Does the market structure on this matter, or is it can it predict it to a certain extent? I'm question to you.
Yes. Well, it will show the very advice that you gave, Dennis and Joel. It's funny that you mentioned 5 because Biogen is very routinely a 5, and those are great stocks to hold. If things do well, they deliver consistent market-like returns if they're around 5. If they bounce up to 10, they're good trading stocks. If they just stay at 5, they're not great trading stocks, but they're great stocks to hold. And here, I'll show you. And if you're following along at home in the easy chair, go to marketstructureedge.com and you can sign up for free and do the same thing. Put in BIIB in a portfolio, and I'll show you exactly what we're talking about here. Here we are. Let me remove my own face from the screen. So here it is, June 7th, day after the anniversary of D-Day, by the way. June 6th, 1944 was D-Day. So here's Biogen. And see, Joel, how it's a 5, no matter what the price does. Now, how can that be? Because the big institutional dollars tend to reweight out of and back into Biogen. And so because market structure sentiment, this algorithm we use to help us determine when to come and go, is based not just on price and supply and demand, but the behaviors behind it. So if those behaviors keep reverting to the mean, so does market structure sentiment. And it will tell you that as long as it's a 5, you stay in it. Here, before the news, look at that. It's the first point over this period of time, 30 trading days. And we can go back, Spencer, to look at what happened in November when the board, I forget what, the FDA voted against it. But here's where we are, right ahead of the news. It is actually a 1.8, meaning it is bottomed, and you want to buy sentiment that ticks up. Then notice short volume. Short volume jumped up from about trend of about 38% of trading volume all the way pretty close to 50%, 48%. That is an exact straddle, Dennis. It will tell us that traders and big institutions both have hedged themselves long and short, puts and calls, swaps for, swaps against. Big money is going to use swaps to say, if anything goes wrong, I'm handing the risk of this to Goldman Sachs or whomever. But that's what it tells you. I would say, based on that the bias is positive. Here's why. Sentiment is all the way bottomed, and short volume is not all the way to 50%. If there's a slight advantage, it's to buyers based on that data. But let's expand it out. So if we go back, with 6 months, it's not going to take us all the way back. Let's take a year. So let's go back to November. There's that really bizarre move, right? And so interestingly, into that, sentiment was rising, short volume was very low. Everybody got caught by that. That's what it tells us. That I think the traders thought that this would get approved then, and it didn't happen. What could you have done as a trader? Stayed right where you were. That's the honest truth. You'd have still lost this much, but it bounced right back, and sentiment would tell you that. Then here's the awesome entry point. You know, when the sentiment recovered here, you could stay all the way till it dips below 5, leave, wait for your next entry point here. You could leave here, come back here, and you say, well, why would I do that? Because you capture all the gains and avoid the losses. And
that's the point.
Yep, that's exactly the point. That is exactly the point.
So let's go on to the other stock. So obviously we got Biogen. It's going to be a major mover today. I want to see the market structure sentiment on AMC now here, because this stock is all over the place and everybody is talking about it. I have no idea how to predict the next price move in AMC. We do know there's flying around on the weekend that it is likely to go into the Russell, because obviously it's, what's that, Spencer?
Russell 1000. It's going to go into the large cap.
Yeah, from the small cap, because it's based on market cap.
It is
most likely.
And realize that the benchmark for the Russell indices, the initial benchmark was May 7th this year. Now we're unfolding all the subsequent steps, and Russell shakes that up every year a little bit to keep people guessing. So where it lands will not be reflective of where it is now. It will be reflective of where it was then. However, it's important. This is a very important thing for traders to know. 95% of market cap is in the Russell 1000. About 5% is in the Russell 2000. That's why if there's any kind of movement of money into the Russell 2000, boom, it moves up very rapidly because it's a very small part of market cap. But the bulk of money is here. And I will tell our corporate customers that whatever you're trying to do, if you're going to be a public company, you need to be in the Russell 1000 because that's where the money is. It's what Willie Sutton used to say when he was asked, well, why do you rob banks, Willie Sutton? And he said, because that's where the money is, right? So if you're going to be a public company, you need to have market cap north of $5 billion to be in the Russell 1000. So they're going to be there. There's no question about that. Now, to your question about market structure, here's the beautiful thing about market structure. It is not swayed by incredible moves. It's still going to tell you when things are overbought or oversold. And it does it very consistently. And I will look at the sentiment trend, and it's been bouncing against the ceiling for a long time, and look at short volume. Those two things will tell us a great deal. Here's an interesting little tidbit about AMC. So we developed the Modern IR in 2005, developed a set of data points that we have been tracking ever since then. Here it is, 2021. One of those is how many times a stock trades per day. And we have limits. The fields with which we populate data are finite. You know, we don't want just infinite fields in the databases and the data warehouses. Well, AMC last week broke that data. I mean, it's an easy thing for us to fix, but it traded more times than any stock in the U.S. market in history. Wow. It was trading over 4 million times per day, not 4 million shares. It was trading 4 million times per day. For perspective, Apple trades around 300,000 times a day. Amazon trades about 160,000 times a day. Walmart, 80,000 times a day. GameStop, around 600,000 times a day. And here AMC was trading 4 million times.
Could you explain that again, Tim? Could you explain that again, please?
All that is number of instances where shares change hands. Is that it?
It's each transaction.
Yeah.
So each time there is a buy and sell that meets. So how is it possible for something to trade in the limited time that the market is open, between 9:30 a.m. and 4 p.m. Eastern time? How is it possible for something to trade 4 million times?
That's insane,
right? It's a crazy number, and it tells you what's happening behind the scenes. And we've talked about this before on Market Structure Monday, that the reason that can happen is that market makers like Citadel or JP Morgan are exempt from the short locate rules. That's Reg SHO 203B2. They are exempt from having to locate shares. So they manufacture stock to fill the immense pipeline of limit buy orders, and then they trade those things thousands of times per second. And they're trying to make a half penny each time. Well, who wants that, right? So, the firms that want that are Citadel and Virtu and Two Sigma and Quant Lab and Hudson River Trading and the stock exchange. The stock exchanges want to promote that as well because they sell data. And what is data? It is the consequence of a bunch of trades, and everybody's got to consume that data. If you're a broker dealer, you have to establish to your customers, big institutions, that you're providing best execution. Are you handling the trades well? Well, where do you think that data comes from? The exchanges sell it at very high prices. So those two things, exchanges and market makers and the short exempt rule is how you end up with situations like AMC trading here. And look, it's not done. I would look at this, this with shorts. This is the $12 billion loss that we've been reading about of people who've been short. And it's very difficult. If the market makers are exempt from locating shorts, you're going to lose. This is a very dangerous market in which to short things that people know about. Short things people don't know about, and you might be okay. But this tells us this run is not over. When this pattern reverses and sentiment declines, telling us that supply and demand are equalizing, and short volume rises above trend, telling us that supply is increasing faster than demand, price will go down.
All right. Let me ask this question, and I'm going to try and not open up a can of worms.
I knew it's coming.
But at the end of the day, is there any way that anybody can know how much naked short selling is occurring?
Well, there is very little naked shorting. And the threshold reports that FINRA requires, not the SEC, FINRA. FINRA is the regulator. It used to be called the Financial Industry Regulatory Authority. And you go back, this is a combination of the NYSE's self-regulatory organization and the NASD, the National Association of Securities Dealers. And that they created the automated quotation system in 1971. That's the NASDAQ. Well, then they combined their regulatory bodies. That became FINRA. And it's a bunch of grossly overpaid folks, by the way, that you look at what they get paid, millions of dollars. But so they regulate these things, and they require a threshold report. What stuff has been short and people have not located it, and there will be a buy-in. It is dominated by ETFs, by the way.
It's exactly what we were just talking about.
78% of them
bought in.
That's not the problem. So the people who are trying to look for naked shorting in here don't understand the way that the stock market works. There's
if you rewind the tape
Tim,
the 40 minutes ago, we went into this for 20 minutes, and they're not going to listen, Tim. Yep. I mean, it's not naked short selling running rampant. That is not illegal. Tell them, Tim. It's not naked short selling.
It's not naked short selling, and it is not illegal behavior that is leading to this. If you have a bone to pick with someone, it is the SEC. And I tweeted this. If you're a short seller of AMC, your argument is with the SEC, which exempted the market makers from the law. I've long said, how can a regulatory body that is an executive branch agency exempt some group from a law created by Congress? It's a question that should be asked. But they're the ones that did it. They're the ones who said, if you're Citadel or Goldman Sachs, you don't have to locate shares. Why? Because they wanted a continuous auction market. They want it to be possible for you as a trader to show up in the market and buy or sell 100 shares of everything at any time. Well, it's a physical impossibility unless a market maker can create shares. So they do. And what we have discovered here in the meme stock era is a huge Achilles heel of the market. Realize this could happen to any stock in the market. And Reddit traders, you should realize this. You could do this to any stock, right? You could do it to any stock. It doesn't have to be AMC. It could be Apple.
They're figuring that out, Tim.
Right? Yeah.
They're figuring that out.
It's not just, we've had GameStop, AMC, everything is getting run. And you have to be careful as a short seller. You obviously have to be careful of who's talking about your shorts. People want to know, what are you shorting, Dennis? What are you shorting? I'm not going to disclose the information of what I'm shorting so that people can say, oh, Dennis Dick is short this. Let's go run this up on him. That's your own information. Why would anybody want to disclose their own position unless they're like running pump and dumps, which is running rampant, it seems like, through social media right now. But, I don't want to disclose my positions, especially if they're short, because we saw what happened to Citron. Andrew left. When he originally disclosed the GameStop and everybody got angry and they ran it up on him.
Right.
So,
Right.
I mean, it is a dangerous game, and we're not coming in here advocating for everybody to get in the short selling game. You've got to know what you're doing. But short selling does serve purposes here, Tim. I want to hear you say it too, because I was saying short selling is what keeps the market efficient. Without short selling, the market pricing mechanism all continues to break down because the majority of your liquidity is actually provided by short sellers.
No question. And the data show us this every day. And I'm just going to make a little plug for you traders. You can see up here on my screen. You go to app.marketstructureedge.com and you can register and use this, because this is the point. You want to know when these conditions exist. And to my knowledge, we have the only platform that will tell you this. Yes, short selling has long been a great regulator for untoward behavior in capital markets. And I would submit to you that the SEC, by exempting market makers from the requirement that you be able to locate short shares to borrow within a window, or you have to cover them, that by doing so, they are distorting the market's capability to tell us whether there is trouble in the market. And it should bother us as traders. It absolutely serves a purpose. I am never opposed to short selling. I thought it was a mistake when we suspended the shorting and the uptick rule during the financial crisis in 2000.
And that was a mistake, Tim. I have the stats on
mistake.
that. I actually did. I ran the stats for Bright Trading, and I wrote it up. And during that 3-week ban, so here's something. During the 3-week ban where they banned, and people don't know this because there may be newer traders, back in 2008, during the financial crisis, there was this worry that short selling was killing the market. They actually banned short selling on all financial stocks for 3 weeks. And then they realized the liquidity dried up. You know what happened on the first day, Tim? There was a whole bunch of buy and bounces. All these financial stocks gapped up on the close because there was nobody to short, nobody to provide liquidity to that. And then they all collapsed the next day. And the end result was the stock market during that 3 weeks fell 18%, and the financials fell 23%. The financials fell more despite not being allowed to have short selling on them. And they realized, we just messed with all free market mechanics here, and this isn't working. And they pulled it 3 weeks later. So we had a real life experiment about banning short selling altogether, and it did not work.
There you go. I think the millions of unfettered minds making decisions that involve risk is far and away the best regulatory mechanism we can have. It's far superior to a bunch of bureaucrats who receive a paycheck no matter what happens and who have no risk at all when they make decisions like that. I am always opposed to that notion, and it's just basic common sense. You want people who have risk to make the decision about things that are occurring in the market.
All right, Tim Quast, GWS says in the chat his breadth of knowledge is incredible. I completely agree. Joins us every Monday for Market Structure Mondays. You can learn more, find out more. His platform, the link is
all know I only know market structure. I'm an idiot about a bunch of other stuff. So it's only this.
You do very well for yourself, Tim, and we love you.
Back at you. Love you guys.